Dear student, so today the case study we are going to discuss how we can solve the case study. From the course FRSA Module 3, Profit and Loss and Balance Sheet Preparation is a case study. And actually during the exams as well as the midterm and the semester, it carries 12 marks for the case study. Now actually I'm going to deal this case study with adjustments also. So this case study easily what happened we can solve in 15 to 20 minutes. So usually I'm going to follow the step-by-step approach. In the step-by-step approach, generally what I will use a starting step like a coding. In the coding, I will use which statement it is belongs to, as well as the which item, major item it is belongs to. For example, if it is a salary is a expenditure and it will appears in the P&L statement, and especially the header called employee benefit expenditure. My coding for salary will be P&L hyphen employee benefit expenditure, EBE. So that way only what happened, I will make it simply the coding. The purpose for the coding is makes very easy to what understand each and everything, and same time it will consume less time, and each and every item what happened we can put it under the profit and loss as well as in the balance sheet. It is possible. Even we don't miss a single item when we are preparing the P&L and the balance sheet. Likewise, maybe I will take one more example. For example, like goodwill. So goodwill is an asset. Generally, it is a long-term asset. It comes under the balance sheet. And normally the long-term assets will appear under the non-current asset, NCA. So that way only what happened, it will appear. So this step is the first step. I think all of you are listened and understand. The coding is the first stage I will do for the trial balance whenever we take. For the entire trial balance, I will do the coding. The coding is the step number 1. Then step number 2, I suggest to prepare list of notes. So how many notes we need to prepare for the P&L and for the balance sheet. So that will be the step number 2. So generally what happens if you see, I will split like this. This is a note under the P&L and this will be the note under the balance sheet. For example, suppose outstanding salary, one item is there. So we need to prepare the EBE note for that. Employee benefit expenditure note. Because salary will be given in the trial balance, then outstanding is in the adjustments. So both we cannot directly put under the P&L statement. So separate note is required to prepare for that. As well as in the balance sheet also, I think if 2 items more is appear in the current assets, so current assets note is required. Even depreciation comes under non-current assets we need to prepare. Then current liability is a one of the compulsory note actually, because the tax actually what happened, we are deducting out of the profit before tax. So definitely what happened, the tax amount will come here. The tax payable amount will come under the current liability. So the current liability is one of the compulsory note we need to prepare it. Similar like that, another compulsory one is reserves and surplus. Under the reserves and surplus, the profit after tax will reflect. So this note is also one of the compulsory note. So this way what happen, I will prepare a list of notes that makes me very clear about that. So what notes I'm going to prepare when I'm going to prepare the P&L, what note I'm going to prepare balance sheet. At the same time, I will use one more small technique here to easily what happen, I don't miss a single item. If two current items are there, two current asset items are there, in the bracket, I will put the number 2. For example, one is cash is there, second is inventories are there. So in the trial balance, so I will make like a 2 in this place. Same like that, for example, under the current asset, the two items are there. Example, one is a plant property and equipment. Second is the goodwill. And the plant property equipment, it got a adjustment. If the adjustments comes, what I mean, I will put a star mark here. Automatically, I will understand the star is there means what I mean, that note one item should come from the adjustment. So this is actually a planning level. If I'm doing this planning level properly by spending some 5 minutes, another 15 minutes of my preparation of P&L and balance sheet has become easy and very, very fast. And even I don't do a small error. And finally, what I mean, easily you can get a 12 out of 12 marks also. Step 3, specifically, I will write the treatment of adjustments. Mostly your case study got 2 adjustments. One is the compulsory adjustment. It's a tax. How the tax to be treated? One will be what happened. Tax one actually the first action. First action for the tax adjustment is to be what happened. You need to what? Deduct with profit before tax. Second one, where it will reflect. Second one, usually adjustment will reflect in 2 places. So one will be we are deducting from profit before tax. Second, this amount we are add with current liability in the balance sheet. So this is with the profit and loss statement, and this is with the balance sheet. So tax is a compulsory adjustment item, will come for all numericals, even whatever model we are working on that. Apart from the tax, another 4 more adjustment item, possible any one can come under your numerical. What is that for and how we can treat that? That also we can see now. The first is depreciation. If depreciation comes, the first treatment is what happened? We in the P&L statement, we need to add with depreciation and amortization note. So the note is compulsory to prepare. And what I mean, this will comes under the expenses side also. Same value. So this is the first treatment for depreciation. Second one, where the depreciation amount will reflect in the balance sheet, deduct from non-current asset. So non-current asset is the long-term asset. From there, what happened? We need to reduce the depreciation. Generally, depreciation will be given like a percentage. Assume the equipment value is suppose 1 lakh. 10% is the depreciation. Okay. 10% is the depreciation. That means how much is the value? 10,000 is the depreciation. This 10,000, what happened? We are going to show as an expenditure in our P&L statement. And same time, this 10,000 we will deduct from the equipment. The equipment value going to become 90,000 in the non-current asset. This is the first type of adjustment. Second type of adjustment is outstanding salary. First treatment for outstanding salary is this. In the P&L, we are going to add with employee benefit expenses. Second, B, in the balance sheet, add with current liability, because still the amount is not yet paid to the employees. So we need to pay for that. So it will be reflected in the current liability. It should be a payable item. So this is the second adjustment. Third one, proposed dividend. The proposed dividend will reflect in 2 places, and both are only in the balance sheet, not in the P&L. Okay. First, we need to calculate how much is the proposed dividend. Mostly the proposed dividend will be given like at the rate of how much per share and all. Example, mostly the share numbers will be available along with the share capital in the trial balance, or maybe in the question, they may give you how many shares and all. Assume in a company, 20,000 shares are there. Okay, 20,000 shares are there. In the adjustment, they are mentioned. The company proposed dividend is rupees 2 per share. That means we need to calculate how much is the proposed dividend. So the proposed dividend is very simple. 20,000 shares multiplied by rupees 2. That means 40,000 is the proposed dividend. This 40,000 will be what happened taken for the adjustment. It will reflect in two different places. Both are in the balance sheet only. From the balance sheet, we are deducted with reserves and surplus. So what happens, sometimes the amount may be sufficiently available or not. So we are only taking from the surplus amount to pay the dividend to the stockholders. Okay. Then this amount not yet paid, only what happened decided. So it is not paid. So still date, what happened, it will reflect under the current liability. Balance sheet add with current liability. Actually, this particular point, what happened, we are deciding how much is the proposed dividend, and still the amount is not distributed or not yet paid to the particular stockholders. So that's why what happened, we are keeping as a payable item. Even you can mention the word either proposed dividend or it may be like a dividend payable. Even this place also you can mention it as a salary payable, because all these things to be what have been paid to the particular people. So this is the adjustment number 3. The last one, fourth adjustment, closing stock. Whenever the closing stock is given, please check in the question itself, trial balance itself, opening stock value is available and purchase of material is available. Both must be available. Then only what happened, the closing stock we can treat properly, right? So please ensure the opening stock value should be available. Second, the purchase of materials to be available. If closing stock comes in the P&L, cost of material is a prime item in the expenditure. From there, what happened, we will deduct this value. Okay, deduct the closing stock value. I will show you the example maybe down. Okay, then you will easily understand. B, in the balance sheet, add with current asset. So the 4 are the major treatment of adjustments. These 4 are the major treatment of adjustments. I will show you the example of closing stock. You will easily understand. Assume in the trial balance, the opening stock is 10,000. Okay. Then along with the opening stock, what happened? We need to, sorry, spelling mistake. Along with the opening stock, generally trial balance, if we got a purchase of raw material, that's to be added. Add purchase of material or raw material. Assume it is like a 20,000. So total how much is available? 30,000 is available. From here, less closing stock of 5,000 rupees minus 5,000. Okay, that means your cost of material is 25,000. You may ask me the question why we are deducting the closing stock. Based on the matching concept, if you look about that, this is the opening stock. It's a previous year stock. Now we are taken. Plus this much money only what happened, we are spent for this year. And only this much is the amount we are spending as an expenditure to get the revenue. So whatever the leftover stock, we will keep it under the asset, and the expenditure will be considered only for the future next year if they sell this. So that way only what happens, they will use it this. Okay.